This is Alan Bush with Archer Financial Services. The main event today is the Bernanke testimony to the Senate Banking Committee. There were some hopes that he could give some strong hints to the possibility that the Fed could add accommodation in the near term. However, these hopes were dashed when, in fact, this was not the case, although the chairman did talk about the economy being a bit on the weak side, leaving the door open for additional accommodation. Our feeling is that there will be a third quantitative easing program announced, probably later rather than sooner, maybe even at the beginning of next year. The feeling remains that easier credit is coming, and I think this will be enough to support stock index futures. In fact, I think this will be enough to outweigh the negative influence of what we're seeing in the Eurozone. So look for a recovery in stock index futures, even though futures are a little bit weaker right now. Over in the foreign currencies, prospects of easier credit from the Fed undermining the dollar and supporting the European currencies. Although these trends have been reversed now with Bernanke's testimony indicating that there will be no near-term easing of credit, at least as far as what he said in the testimony today. Longer term, we remain very bearish on the euro currency. It's going to be a long time before those problems are resolved in that region. We are seeing yields on Spanish and Italian debt increasing, and we're getting close to the 7% threshold, point of no return on Spanish sovereign debt yields. So from here, I would expect lower prices for the euro currency. We're already under pressure after being higher earlier. 120 is the next support for the euro currency, and I believe that this will be breached. We remain bearish on the Australian dollar and the Canadian dollar, although to a lesser degree than how we feel about the European currencies. Over in the credit markets, we are seeing yields continuing to decline. We are very close to contract highs in treasuries. Prospects of easier credit from the Fed will support this market, as will the deteriorating situation in the Eurozone, all of which are very bullish fundamentals for the credit markets. Also thinking that Treasury futures will be testing contract highs in the next couple of weeks. So this bull market remains in the credit markets, and this is a trend that I think will likely last well into the balance of this year. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.